Step back and see the macro and digest it down to the micro. Trading, investing, and geopolitics from macro down to the micro. Welcome to Macronomics.
Hey guys, welcome back to Macronomics for anyone new tuning in. So guys, real quick, I needed to hop on here and share an insight from a couple episodes ago. And essentially, it was along the lines of investing. And essentially, it was, I think it was just like how to invest. But I needed to get back on here because it hit me heavily. I've been studying a lot of Benjamin Graham's material, essentially Warren Buffett's mentor, and I'm reading a book about him. It's Fundamental Analysis, and I mean it's hitting so hard. I'm like, I need to dive into his books, which you've probably heard of, The Intelligent Investor and Security Analysis. The reason why, guys, is because it's a different approach. The approach I shared with you guys before was a trading perspective within the equity market. And this was primarily based on the security price, right? And there's nothing wrong with that. But I feel like we have to be able to segment. Specifically, guys, I've been trading some currencies, and I enjoy this. I've been getting into a little bit of bonds, learning these different avenues. But what I've learned is you can't do all of it the same. I don't need to be trading securities. First off, within the equity market, guys, there's a huge, pretty much the ocean that controls the fluctuating waves of prices is, from the macro view, it's interest rates, the economy, statistics, etc. Because you notice, as when the stock market goes up, most of the stocks follow. When the stocks go down, most of the stocks go down. Whereas within trading, we're not trading these specifics. You're looking for your however you trade. Those parameters are just different. So my point is this for us today, guys, that will help you, as it's helped me, is if you're going to invest, I would highly recommend first off studying some of Ben Graham's material, because where I'm at now, this is just being frank with you guys. I am not at that point to be a diligent, profitable, disciplined investor, because I see that, because how you do one thing is how you do everything. And the aspects of trading that have worked for me, I find myself taking on over into investing. As an example, I was in Shopify and Google recently, and the parameters around trading, I'm treating these as trades. Whereas now I want to build the skill set of being able to identify the parameters of a successful company, the subtleties that identify value or growth within these companies, and then being able to invest for the long term. And when I say long term, what that means could be a couple months, years. I mean, I'm still learning this, guys. I'm putting it together. But the point is this: you can't trade and invest. You can't merge those two, because, it's like investing. If you was to take the investing into the trading realm, you would get slaughtered, because when it's time to leave the trade, if, let's say, not slaughtered, but let's say USD JPY, right? You buy it because you feel like it has inherent value in this process. But first off, how do you identify with the currency? Because you got the banks and you got the economies and the statistics, but it's so much more than that. And the value is not inherent in how much it is, because they can print it. The value is in the economy, and it's so complex. I feel like it that wouldn't be a good investment. Maybe a long-term trade based on what's going on within different parameters of the world, but not investing. Whereas now let's switch it. Now let's say we want to trade Shopify, as I was, right? You're getting these gyrations of the market, and you're getting mixed signals. Whereas instead, if you come and you invest, you've identified, wait, the intrinsic value is actually $49 and is currently trading at 30. Here's the parameters I've been able to identify. I'm going to invest here and let the market does what it do. And when it gets to this point, I'll look to sell because this is the intrinsic value. And so that's just a little insight into, as we move forward, bringing that macro to the micro. I feel like macroly speaking, investing is a huge domain that we have to step into because, yes, we would like to build our wealth and compound and whatnot. But the key is being patient and diversifying. You can trade, you can invest, but you cannot merge how you do both. That's essentially today's episode. If you're going to trade, you need to trade and have the discipline and the parameters set around that. If you're going to invest, you need to have the parameters and the discipline around those guidelines that you set. But that's it. You can't trade and invest. I feel like you mix those two, you'll stress yourself out. In the past 2 weeks, that's what I've been through because I was treating some of my stocks that I bought as trading when I was trying to go about it from an investment point, but I wasn't able to identify intrinsic value. I just bought it because, the stock market's down. But that doesn't work. So that's just a ramble on what it is, guys. If you get a chance, the book that I'm reading here, let me pull it up real quick for us. It is called Fundamental Analysis. Oh, here, let me read it, the whole thing. Secrets of the Great Investors. Fundamental Analysis, Value Investing, and Growth Investing. Overall, it's been a great book thus far. Truly enjoying it just because of the principles that are being shared. The principles are what builds the blocks of your house, your understanding. You don't have to trade or you don't have to invest like Benjamin. You don't have to invest like Warren. You don't have to invest like any of these powerhouses that we know about within the investing in the financial world. You don't have to. But if you can extrapolate the principles that they operate on and then incorporate that into your processes, that's where the true growth comes. And as an example, Benjamin Graham, he his based on his upbringing and his environment, his approach was to invest in commodities, or at least this is what I got from what was shared. Commodities in the form of steel, etc., getting them on a value. And Warren Buffett's approach was investing in franchises like Coca-Cola, Hershey's, because he believed that if he went to a store and he wanted to buy a Hershey's chocolate bar, they didn't have it, he would go across the street to get it. Whereas if it was a carton of milk, he's not going across the street to get a carton of milk. He can get a carton of milk wherever. And so the point was for Warren was franchises. And he took the principles of Benjamin, and built on it. He didn't abandon, he expanded. He didn't abandon what Ben had taught him, he expanded upon it. So as you learn these principles from whatever avenues, whether it's trading or investing, build upon them and incorporate them within your models. Extrapolate the principles, the core essence of these truths, and then modulate them, so to speak, to the present day. Because how Warren traded, or how Warren looks at the world, he doesn't understand nothing about Bitcoin. He don't like it. At least from his recent talks and whatnot, he doesn't like it. And there's nothing wrong with that because of how he has been raised and his experiences. And not to say that it's right or wrong, but the point is your experiences help shape your view. So use that, extrapolate the principles, and incorporate that. Until the next one, guys, keep putting the micro to the macro, and I'll talk to you guys in the next one.